Welcome to ECR Tools. Today we're dealing with rising interest rates in the UK economy and how this is pushing up mortgage rates and adversely affecting families in the UK. Now, if you're new to this channel, remember to subscribe to its content, like and share our videos. Do add your comments and contributions. Everything that is expressed here is my own opinion based on data that I've gathered and my own knowledge of how the economy works. Feel free to agree or disagree with me, but this is all a process of learning and trying to find solutions for the problems that we face today here in the UK. Now, on the 22nd of June 2023, the Governor of Bank of England, Andrew Bailey, increased interest rates to 5%, UK base rate to 5%. And this is creating a hell of a problem for families with mortgages in the UK. Now, the money expert, Martin Lewis, leading on to this date, did warn of the dangers if the governor was to take this action. His arguments have always been based on, the fact that Britain has been through Brexit, we've been through COVID, we've been through Ukraine war, the Liz Truss and Kwasi Kwarteng saga, and we've also have the cost of living crisis. Now, with all these pressures, the money expert was basically recommending possibly for a hold, the MPC being the Monetary Policy Committee of the Bank of England, to keep a hold on the potential rise in interest rates. However, Andrew Bailey, the governor, went ahead to do the actual opposite by increasing UK's base rate by 0.5%. Now, soon afterwards, we had the Prime Minister, Rishi Sunak, come in to say, I've got this, or we've got this. And then the Chancellor of the Exchequer, Jeremy Hunt, also came in with, I don't know if this is supposed to be a solution, but he recommended that families could switch their mortgages to interest-only mortgages for a period of time, or to extend the duration of their mortgage, maybe from 25 to 30 years. And probably his final recommendation was the fact that if your property was going to be repossessed, that you had a right for like a 12-month deferral. And so these are the responses that has been given by the Chancellor of the Exchequer, Jeremy Hunt. Many critics have stated that his knowledge of finance is very limited, but I suppose everything will show in the work that he does going forward. Now, we're basically all looking for solutions. So I've basically listened to a lot of experts, economic experts on this matter, and just generally trying to find out within the economy what people are seeing as the cause and what could be the solution of this problem, because the projected base rate is, or the base rate is basically projected to rise even further to about 6.5%, as projected by the Governor of Bank of England, that if inflation rate doesn't go down, then they will continue to raise interest rates to solve this problem. And so, to really try to give the ordinary guy some kind of an understanding of what is going on, because there's a lot of jargons and big words that are used in this market, such that the average person doesn't really understand what is going on. From my understanding, since 2009 up until 2023, there has been a great amount of quantitative easing within the UK economy, leading to a tune of about £895 billion. Now, a bulk of it, that is probably about half or more than half of it, happened thereabout in the COVID period. So I'll probably say maybe the third quarter of 2020 leading on to the 2021 to the end of the COVID period. Within that time, there has been quantitative easing of about 450 billion pounds within the system. And this is what is actually causing the inflation. To the layman, inflation is just the increment, the percentage increment in prices of goods and services over a period of a year within an economy. So that is the basic explanation of what interest rate rises are. So for example, if an item costs me, say at the beginning of the year, cost me say £100, and the inflation rate is 20%, at the end of the year, I'll be buying that item for £120. In a way, when inflation is basically skyrocketing, that means there's too much money in the economy. People are spending too much. The way that any sort of, now the Bank of England have the independence to curb this situation is to increase interest rates to mop up that excess money within the economy, to basically slow the economy down. So yes, Andrew Bailey is doing the right thing by trying to slow this situation. One other sort of yardstick that we use in an economy to measure how well a government is performing is actually inflation rate. So in effect, if inflation rates are high, potentially one could say government is stealing money from you, because they are the ones that are controlling it. And if you have your money and the value of your money keeps getting wiped away, then that means that a government is probably not doing so well if under their tenureship you are having interest rates rising, inflation rates rising. Because if that happens, that means that if you have your £100, your £100 is not taking you as far as it used to. So I personally, on my own experience, I will say for example, if I should go back to say, the late 90s or sort of early 2000s, when I had £100, it would take me quite a number of days to spend that sort of money. But now when I take £100, it's like a daily, I buy some fuel, I buy something from the shop, and £100 is finished. So that means that in effect, I feel that I'm being robbed, because I'm working hard and I'm not getting value for my money. So what are the causes of this rising inflation in the UK? Because the facts are, in most of the G7 countries, the inflation rate in these other countries, UK's inflation is twice as much. So for example, if we should compare the UK inflation rate, to say the US currently are having inflation rates of less than 4%, between 4 and 2.8%, depending on what indicators or variables you are using to come up with this figure. So the UK is exceptionally higher compared to France, compared to Germany. Although we continue to hear, even from the Prime Minister, he said, it's the same everywhere. And the facts are that when you look at the real figures, if you go and do your own research, you will find that these countries have lower inflation. So the Chancellor the Governor of Bank of England is saying that because of inflation, or because of his inflation targets of 2%, he will continue to raise interest rates. But then the problem that we face now is that since 2009 to say the current day, we had very low inflation interest rates, very low interest rates. Now this translated in house prices basically skyrocketing, because when the cost of borrowing, being the interest rates are very low, then most people want to borrow to buy a house because renting is so expensive. So that is what naturally people will do, and then that then pushes up house prices. And so what you're saying is that people are saying, oh, back in the 80s, late 1980s, there was interest rates were like 15%, and we were able to pay our mortgages, and we have no sympathy for the younger generation that have probably overexhausted their borrowing capacity and bought big houses at higher prices. So you get that type of argument, because what is actually happening in the economy is only affecting maybe about 2/3 of the economy, but 1/3 of the economy being people that have had properties for many years are not probably feeling as much an impact as the younger generation, probably sort of maybe 40 or and below. And so what you're then finding is that in those times, house prices were relatively lower. They were actually, in terms of their ratio to your income, they were much closer. So for example, one could have had an income of say 20,000 a year in say 1994, and then the house that he was probably buying was about 55,000, which is probably less than a ratio of 1 to 3, right? But currently the same house is now worth about £600,000. We're just trying to use London prices. However, the average income is about maybe £35,000 a year, and therefore the ratio is now changed to about probably 1 to 16. And this is the reason why any slight increment in the interest rates today can cause such huge economic damage, or a damage to mortgage holders, because you wake up and your mortgage can actually increase from say £1,000 to £2,000, and where are you going to find that differences of income from to actually meet that payment? So this actually demonstrates the seriousness of the problem that we face with rising interest rates. Now, the governor of Bank of England is saying that it's based on this 2% inflation rate target. Yes, that is understandable. However, the point is that practical? And the answer is that it's a no. It's not practical, because you've had an economy that has come through Brexit, it's come through COVID, it's gone through cost of living crisis, and obviously that artificial shock from the Kwasi Kwarteng Liz Truss administration. And then you also have the Ukraine war. And so there are so many issues that actually has hit this economy, such that if you use a 2% inflation target to set your interest rate, then you are certainly not doing the right thing, because it's unrealistic. The next thing is that what is actually causing the inflation? What is causing it? And the reality is that the inflation is being caused because of lack of regulation. And I'm going to repeat that: lack of regulation within the UK economy. Now, what most people will realize is that about 70 to 80% of our expenditure, of our household expenditure, is going into our mortgages, is going into our travel cost, that's the rail services, is going to our electricity and gas bills, fuel cost, parking tickets, airport parking tickets, and the spending in supermarkets. Now, all these institutions, the supermarkets, they only probably about 8 or 9 major supermarkets, so they could be classified as a cartel. If you go to the rail services, it's only a few companies that are operating in that area. That can also be deemed as a cartel. If you go to the oil companies, your gas, your Shell, your BPs, and the law, they are also a cartel. And, you know, the list goes on. Airport parking tickets, they are more like a monopoly. You know, they basically, you go to Stansted for more than 15 minutes parking and you'll be paying £25. If you stay there for less than 15 minutes, you pay £7. If you go to Heathrow, is there, Gatwick is there. And so you're having a lot of cartels controlling these markets that are actually taking about 80 to 90% of UK household incomes. And so when you pull out the regulators and you are not allowing regulators to go in to regulate and to ask these companies to justify why they are increasing prices, then inflation is going to keep going up and up. Because then again, you got obviously you got your local shops, your corner shops also joining in this rampage of the expenditure of the income, taking away incomes from normal families. And in an economy, when family disposable incomes are taken away, you know, you can only end up in a recession if there is nothing left. I mean, look at the European economies, probably in America as well. You have a higher disposable income, and that is what, you know, cause the economy to turn around. Because if people have disposable income, they can actually go to the restaurants, they can travel, they can go on holidays, and they can keep that economy moving. But when you suck out all the money, a few companies takes all these monies from the majority of the people, then surely, you know, you're going to have a really massive problem. And so this projection of interest rates going up to probably about 6.5% is something that must be stopped. Because if that happens, then most people, even what we are, the position that we are in today, once people basically their 2-year mortgage term comes to an end, you are potentially going to see a lot of families losing their homes, and this leads to a whole lot of social issues. And so this must be solved. The regulators needs to be brought in. Companies that are charging these type of putting up prices willy-nilly because they can. They put up prices and they have all sorts of justification. It is because of Brexit. It is because of the COVID war. It is because of a cost of living crisis. You know, there are so many multiple reasons why they're putting up these prices. However, when they put up these prices, they actually translate into supernormal profits. And we have seen that with a company like Shell. And with all this, I have data to support what is being said. Now, once again, sometimes we over-rely on data to prove things. But once again, you're looking at what sort of component is used in, basically computing this data. However, you know, some of the stuff that is being said will be demonstrated here with data for you to see what is happening. Because when you increase prices and your price increases are because of the cost of production going up, then your price increment should not actually translate into supernormal profits. Your price increment should actually, your profit level should be thereabout similar to what you've always had, right? You shouldn't have supernormal profit because the extra pricing that you putting up, you're using it to cover your costs. But this is not the case when you go and look at the profits of the supermarkets, when you look at the profits of the oil companies, when you look at the profits of the rail companies, when you look at the profits of these parking, what do we call it, airport parking companies. And so what you're saying is that you, within the economy, you are seeing a massive redistribution of income from the very poor to the very rich. And this type of thing must cease because there's a limit to everything. And I think that at this stage, the limit is getting a little bit higher and it needs to stop. Now, as I said, this is my own opinion. it is an open, it basically creates a dialogue. You don't have to agree with me or disagree with me. But if you have an input, if you have something to say, if you know why inflation rates are just going up and up and up and how it can be stopped, then this gives you an opportunity to come in to say, what you think. I mean, personally, I have had experiences where I go to a local shop to pick up some stuff from the shop that I bought, say, yesterday for 50 pence. I go back the next day and it's 75 pence. And I've had an experience where I walk into a shop and I actually walk through the shop without buying anything because every single item had gone up. Not for a smaller percentage increase, but 50% overnight. And I cannot understand that. I've been to a local shop, corner shop, where somebody bought somebody buys an item for, say, £1.50 yesterday, walks in today, and it's about £2.40. And this is something that I have personally witnessed. And so if you have the regulators checking on why, companies are increasing prices, you go to supermarkets, they putting up prices on every single item such that, your income is not taking you anywhere. This type of thing must stop. This is why we have governments, because they are basically policing the economy. It is their duty to make sure that this type of situation comes to an end. Because if that stops, then immediately you will see that the inflation rate will drop. Or, this is just a suggestion, if a company is going to increase their prices maybe more than 5%, then they must justify that with data to the regulator to show the regulator that these prices are not being increased, so that basically an easy way for them to make profits. But then it is a justified price increment. They must produce data to support their action. And also, their increment should not translate into normal profit, because if it does, then the regulator can go and hold these companies to account. And until that we reach that level of accountability and integrity in basically in the way these companies conduct their business activities, then surely this inflation rate problem in the UK is not going to come down. People have used Brexit. Yes, surely Brexit have basically caused red tapes. It's more like red tapes, but the tariff is the same, it's zero. With stuff going out of the UK and stuff coming in, it's just red tapes. Yes, it's recognized. However, the UK is also now got an opportunity to do businesses with other countries without any restrictions from the EU. And the reality is that if the UK were actually in the EU, they couldn't, the chancellor, the then chancellor, which is Rishi Sunak, couldn't have basically applied that level of quantitative easing by printing cash. And the printing of this cash is what is devalued the pound to that level, and it's actually caused this inflation that you and I, the ordinary hard-working citizen, is paying for, because this inflation is actually wiping monies that I have put away. It's wiping it away. Because when I go tomorrow, when I take up £100, it doesn't do anything. It goes up like in a day. Whereas in the past, £100, it would have taken me a week to spend that sort of money. And so we are basically paying for it, and we're saying, stop this. Because, families is going to destroy the economy. And people are saying, we don't know the reason. It's very simple. Bring in the regulators and let the companies, anybody that is increasing price for more than 5% must support it with data. They must justify it, and their justification must also work according to the way that they have displayed that they're going to make this thing work. And if it doesn't, then surely they get their penalties. And this can also be a way to help slow this inflation. Now, if you disagree with my analysis, you can actually go and check the data yourself. Compare it with other countries. Another thing that people are not probably aware. So, for example, in the States, in the United States of America, and in most of these European and Scandinavian countries, what they have is that when you take a mortgage, you have a fixed rate for the term of the mortgage. So, for example, if you take a mortgage, it will be fixed for you for 30 years. So if they fix it for you at 2.99 for 30 years, that means that within that 30 years, if interest rate goes up to 7% or 10%, it does not affect your mortgage. And this is why other countries, their living standards are much better than the UK, i.e. in terms of households and how they keep hold of their own assets, i.e. their properties. So when you go to Scandinavia, it's the same. If you buy a house, the rates are going to be fixed for you for the period. If you take a 25-year, they fix it for you. It can be 2% for 25 years. Such that if inflation is going up and therefore interest rate must go up, it's only affecting you on items like food and, the basics. And so it's not affecting you, the family. It's not destabilizing a family. It's not making a family homeless. Are you with me? So this is something that people should actually research. If you think that I'm not telling you the truth, go and research it. If you have people that live in America, call them and talk to them, and they will explain to you how their one works. Because your mortgage and your rent takes away 50 to 60% of your income. And therefore, when this interest rate is going up, obviously that's just the base rate. This is the base rate, is the rate at which the Bank of England loan money to the banks, and they also have to add their profits. And therefore, assuming the base rate is 6.5% by the end of the year, your typical mortgage rate is going to be about 8%. And if you have a mortgage, the average younger person, properties they're buying for 400,000. You're not going to get anything decent for 400,000 in London. It has to be 550, 600. And if you're taking up that sort of loan and your rate goes up to 8%, then you know that you are going to lose your property. So this thing must stop. The Chancellor of the Exchequer, he knows what is coming, and so he says, you can defer your repossession for 12 months. What about after 12 months? After 12 months, can you still, your house will be repossessed. Somebody is taking a loan to pay them off sooner, 25 years, and then now your recommendation is that they have to extend it to 30 years. Somebody is done what we call a repayment. They are being recommended to take an interest only. So these are not really real solutions. The solution must come from the regulation. Companies, all these cartels, must be regulated. And, we're not saying price control, but they must justify, and all the price increments that they've had from the COVID period, they must justify. Otherwise, taxes and regulation and legislation is what the government needs to use to balance the economy. Now, the purpose of a government is not there to make rich people poor. No. The purpose of a government is to ensure that there is a baseline, there is an economic baseline for those who are not able, those who are not as smart, those who are struggling. There must be something to keep a minimum living standard. And this is very common within the European and the Scandinavian economies. And from what we know, in the USA, where you buy a house and it's fixed for a long period of time, that in effect is some level of a baseline, which the UK doesn't have. And this is where now our attention and our focus should be. So I think that regulation is the one way that the high UK inflation rates could be brought down. And then that will then stop this projected rising interest rates, which will then transfer or translate into higher mortgage rates and will basically put a lot of families on the street. Now, to finish this off, I am going to run through some data as the conclusion supporting these arguments that I've made. If you're new to this channel, remember to subscribe, like, and share this video. Add your comments and contributions. Add your opinion. I am interested in knowing what you think is the solution to this projected interest rate rises and this inflation that is basically that continues to remain high because of that lack of regulation. Okay, so I am going to try to incorporate this the inflation data. I think as it is, I may be having some difficulty in doing that, and so the data will be incorporated at the end of this video, but I'm just gonna try to read through it what I have. So for example, if I'm to look at the UK inflation data, that for example, the levels that we have today was last time experienced around about 1989-90, where we had like a peak level of about 5.9%. And yeah, I think, yes, round about that, yeah. And then the data that we have today, we are basically hitting that sort of 9-10% level around about 2022, and this is coming down to about 8.9% at this time, but it's still relatively high, and this once again can be stopped, I think, more through regulation. Now, if I go to the next set of data, being the interest rate data, once again, I can see that it was very high in sort of around about 89, 90, where we were sort of hitting in excess of 14%. And then come 2009, this had dropped to a very, very low level, well below 1%. And this was basically retained all the way through to about 2021, 2022. I think around about 2021 we were at our lowest, and that has basically risen since to the 5% level that we have again. We have data for house prices, UK house prices, and obviously the average income, and then also profits of Shell. And so all that will be made available in this video, in the description section of the video, so you can look at it yourself. And please do add your comments and contributions. Thank you for watching EEC Art Talks, and hopefully we come back to you with more information on this issue. Thank you.